wonder how a day trader ranked in a jaw-dropping 18 million in profits? Stick around, because in this video, we're diving deep into the trading strategy and the one key indicator that fueled this guy's massive success. We'll spill the beans on how he pulled it off and show you how you can use these tips to make smarter moves with your own investments. This story proves just how powerful a solid game plan and the right tools can be. Come along as we unpack the indicator that turned him into a millionaire and share lessons that could help you hit your own financial targets. Don't skip this chance to learn from a real trading rock star. John Carter is a big name in trading circle and brains behind Simpler Trader, a company that dishes out education and tools for traders. He's also written some killer trading books like Mastering the Trade and the Squeeze. One of the tools he came up with and uses himself is called the Squeeze Momentum Indicator. This bad boy helps traders spot when the market's super quiet and likely to explode with a breakout soon. It's a technical tool that pinpoints breakout chances by blending two indicators, Bollinger Bands and Keltner channels. Bollinger Bands measure how wild the market's swinging. They're two lines drawn two standard deviations away from a simple moving average. When a stock's price jumps outside these bands, it's a signal that a trade might be worth a look. Keltner channels are kinda like Bollinger Bands, but use a different formula, plotting lines based on a moving average and the market's average true range. The Squeeze Momentum Indicator throws both of these on the same chart. When the Bollinger Bands tighten up and slip inside the Keltner channels, that's called a squeeze. It's a sign the market's super calm and the big move could be coming. This indicator also has a histogram that tracks the market's momentum. When it's positive, the market's trending up. When it's negative, it's heading down. Traders can use this to spot trade setups. If the Bollinger Band is squeezed inside the Keltner channels and the histogram's positive, it might be a bullish breakout on the way. On the flip side, if the histogram's negative, it could signal a bearish breakout. All in all, the Squeeze Momentum Indicator is a killer tool for traders hunting breakout chances. Pair it with other technical and fundamental analysis, and you've got a shot at making better trades and boosting your profits. Now that you've got the scoop on this cool indicator, let me walk you through some ways to trade with it. First, you'll notice the market's flat when the indicator shows red dots. That's your cue that a breakout's probably coming, so you can jump in to ride a trend. Take Bitcoin on a 4-hour chart, for example. When the indicator flips from red to green with a positive histogram, it's time to go long. Set your stop loss at the latest swing low and exit when the histogram signals the trend's weakening. That setup scored a risk-reward ratio of 1 to 3.38. Pretty sweet. The downside? This strategy can throw out some false signals, as you can see in earlier chart candles. But with solid technical analysis, you can sharpen this breakout approach. You can also use this indicator for pullbacks or throwbacks. Picture the euro-dollar on a 5-minute chart with an uptrend. I marked the last swing high, and when the price hits that zone and bounces, you wait for the Squeeze Momentum Indicator to confirm the trend's strength. Go long, set your stop loss at the nearest swing low, and exit when the histogram flips from positive to negative. That trade nailed a risk-reward ratio of 1 to 2.73. Another win. If you're still with me, hit that like and subscribe button to support the channel. Thank you for that. Another trick is trading divergences, where the asset's price moves opposite to the indicator. On the S&P 500 mini futures with the 1-minute chart, you can spot a divergence. Enter the trade when the last bullish micro trend breaks and the indicator shows weakness. Set your stop loss at the last swing high and aim for a 1 to 2 risk-reward ratio. That was a winning trade too. Now, let's tie these three strategies together. You can use the TTM squeeze indicator created by Draken, keep it on default settings, and add an exponential moving average set to a 200 period.
Unlock your trading potential with FundedX. If you're ready to elevate your trading game to new heights, look no further than Funded Next, the ultimate platform for promising traders worldwide. Profit sharing from challenge phase, profit sharing right from the get-go. Yep, you heard it right. We're the only prop firm offering this, giving you that extra push to reach the top. Say goodbye to trading under pressure with Funded Next. You trade at your own pace with no deadlines hanging over your head. Enjoy the best trading conditions in the game with Funded Next. You get raw spreads and the lowest commissions, ensuring every trade works in your favor. Guaranteed payouts. Worried about when you'll get? Don't be with our 24-hour payout guarantee. Your earnings will hit your account within a day. And if we ever miss the mark, we'll top up your payout with an extra $1,000. Ready to embark on your journey towards trading success? Join Funded Next today and unleash your trading potential like never before. Contact us now to kickstart your adventure. Don't miss out on this opportunity by clicking the link above or down in the description to be part of a dynamic community shaping the future of trading. The world of trading is yours for the taking. Seize it with Funded Next.
Now, for short trades, the price needs to be below the 200 EMA, of course. Check if any of the strategies we covered apply. On the DXY chart, aka the dollar index, with a 3-minute time frame, we see a divergence and a pullback happening together. Enter a short trade when the indicator signals weakness. Set your stop loss at the nearest swing high and target a 1 to 2 risk-reward ratio. Guess what? That trade worked out great. Now, for long trades, the price should be above the 200 EMA. On Amazon's 3-minute chart, we spot a divergence and a pullback at the same time. Enter a long trade when the indicator shows weakness. Set your stop loss at the closest swing low and aim for a 1 to 2 risk-reward ratio. Another win. Hope you found this video helpful and picked up some new tricks. Trading is risky, so always do your homework and talk to a financial advisor before jumping in, and I'd be more than happy to help you with that. You can find my email in the channel's description though. Don't forget to hit that like button and subscribe for more tips to level up your trading game. Thanks for watching, and I'll catch you in the next one.